All right, good morning. It is Monday, May 19th, 2025. We hope everyone had a nice weekend. It's definitely getting warm here in Charleston. My daughter's now counting down the days of school that are left. She's excited for the summer. You get to spend some little more time with friends and family. We hope you had a nice weekend. Let's see, today is Monday the 19th, which means a week from today is Memorial Day. So certainly looking forward to seeing many of you next Monday's Client Appreciation event with the coastal, the food truck with the wood-fired pizza. So that always a good time. All right, next thing in my notebook, Form 5498. So most of you likely receive some kind of email notification from your custodian, all right, so whether that's Charles Schwab, Fidelity, Altruist, whoever it might be. So Form 5498 has been released kind of in the last week or two. All right, so for most of you, no action should be required. As a reminder, Form 5498 is largely just kind of a summary of IRA activities for the 2024 kind of tax year. All right, so it's going to include things like IRA contributions, non-deductible IRA contributions, conversions, things of that nature. Which, as long as you are properly communicating with your accountant, this is one reason we always request to see a copy of your tax return once it's finalized, just to double check to make sure your contributions, conversions, and everything, that everything looks right in our eyes. So for most of you, this again should be a non-factor. So that 5498, just one of those, it's for your records. All right, so you can put it in your file, or I know many of you these days are paperless, so you scan it, you upload it into your secure document storage, and shred it. But certainly reach out to our office if you have any questions. But you shouldn't need to do much with Form 5498. All right, last Monday we had discussed kind of the big news over the previous weekend, the de-escalation between the U.S. and China, and reducing some of the tariffs. The pre-markets were up last Monday, and that really held throughout the week and some. All right, so we had U.S. stock markets up roughly 5% last week. So really strong week. U.S. markets are now roughly flat for calendar year 2025, which is nice to see some of that relief rally. International markets continue to outperform. Yes, many benchmarks up about 13% in international markets. So we've touched a lot on the importance of international diversification, just global diversification in portfolios. It's been a big plus in 2025. All right, last week we also received some really encouraging news on the inflation front. All right, so consumer price index 0.2% month over month. And in terms of the annual number, so 2.3% year over year, meaning comparing April, so last month, April's basket of goods to the previous April, right? So just 2.3% inflation in that 12-month period, which is the smallest increase since February of 2021. So really good news there. And then to add on to that good news, the producer price index, all right, which is, many feel is a good leading indicator to what the consumer price index will be. So producer price index is the cost that producers are creating goods at. That number actually went negative, so it actually fell month over month, which is a really good sign moving forward. So we'll see if that comes to fruition, but definitely some good inflation data last week. Okay, and then just kind of over the weekend, many of you have probably seen some of the headlines, but Moody's downgrading U.S. debt from AAA, down one notch to, they call it like a AA1. All right, so in my eyes, not that big. The Moody's downgrade's not that big of a deal. And actually, the Moody's is kind of like the last of the three major credit rating agencies to do this, right? So Fitch and S&P did this, in years past. So while, I don't think it's that big of news, like, I do wish more people would talk, particularly politicians, about the U.S. national debt. Maybe it's something we'll dig into a little bit more, just in terms of communication. The way that all works, because I do think it's a problem, and it's going to need to be addressed in some way in the future. Both sides of the political aisle are very guilty of this, really since about 2000, the year 2000, so call it the last 25 years. Just the spending, the deficits, and just the debt level going to where it is now, what, 36, 37 trillion. It's not sustainable. So they're going to have to make changes. I haven't spent a lot of time looking at the most recent House bill that they're kind of working on in terms of extending the Tax Cuts and Job Act and all that. But just from what I have read, it looks, at least the few sources that I've seen come in, it looks like it is going to continue to add a touch to the national debt, which I don't love. Both sides of the political aisle will tell you, while they're in power, right? Like, well, eventually we'll kind of grow through GDP. We'll grow our way out of the debt problem, which I don't know. I'm not convinced. So I wish they would figure it out and take it a little bit more seriously. And just on that note, that's one reason in our office why we think it's really important for those of you to be considering Roth conversions each year, right? Because yes, we are in, tax rates are relatively low right now, particularly if when you retire, and you might find yourself in a lower tax bracket than you've been in a long time. And that might be a really nice time to be converting money over to your Roth where it can't be taxed in the future. Because at some point they could definitely raise tax rates to try to fix the problem, right? And whether that's 3 years from now, 10 years from now, 20 years from now, while the ball's in your court, probably want to be considering Roth conversions and moving money from pre-tax over to Roth when the time's right. All right, so when you're working and in higher income, probably not then, but something to be considering each year. So questions, comments, concerns, please don't hesitate to reach out to our team. And we look forward to seeing you a week from today. So we hope you have a nice week. Thanks.